Let's start with the tariffs per se, right? I think shipping industry has gotten used to tariffs over the last few years. The trade generally moves, right? It's demand dependent. But what we are seeing now is slightly different, right? It seems to be different because the reciprocal tariffs which are in place right now are significantly higher than what the market expectation was, right? We've started seeing some slowdown happening in terms of the volumes which are coming out of China. I think there was a significant front loading which happened over the last few months, right, before these tariffs came about. So we saw the first quarter numbers from Port of LA, Los Angeles, I think they were up around 5.2%. So we saw significant front loading. And what we are seeing now is the numbers for May as well as June, they seem to be trending down. It could be a negative number for US imports in this quarter, right? So that's on the tariff side particularly. Just mentioning on the USTR port fees, right? I think you mentioned it's a reprieve. It certainly is. I think they did listen to all the comments which came in, I think at the hearing as well. So it's a much watered down, much narrower scope what we've seen come out of the recent proposal last week.
This will certainly increase shipping costs. Yeah. Is this something that will be absorbed by the supply chain or the consumer?
Yeah, I think if you look at shipping generally tends to maximize efficiency, right? I think you're talking about it's a very complex system, but it's a very efficient system, right? With all these regulations coming in, these tariffs, these port fees, what it does bring in inefficiencies into the system. So we do expect some of this to have an impact on the freight rates. We will see port congestion build in. There could be inefficiencies into the global supply chains, and eventually that needs to be passed on, right? It's generally borne by the supply chain as well as the customers or the consumers.
In terms of the Chinese shipping companies, what ways can they restructure their operations in terms of routes or adjusting their fleet to get through this?
Yeah, that's very interesting, right? And that's the challenge of the supply chains. As of now, like I said, you have to maximize efficiency, right? Now you'll have to create new entities. If you look at certain alliances in the global shipping container carrier space, you will have the ships which are non-Chinese built, right, calling on to the US. You will try and restructure your Chinese built ships to serve the other markets, right? So you will have to reroute, you will have to reconfigure your strings, particularly on the container shipping. That will have an impact because it's inefficient, right? So we will see some of the Chinese shipping companies, particularly COSCO, CL, mostly focused on the European trade, Africa trade, your South America, Latin America, and try and avoid the US trade particularly, and serve those via their partners in the alliances, right? But like I said, that leads to inefficiency that will cause higher freight rates.
And how are the non-Chinese shippers, how are they adjusting their strategies to capitalize on this potential new market?
Yeah, so I think what would happen is, like I said, they will try and restructure, change some of the ownerships. You will have sale and purchase market heat up a bit where some of the owners buy these vessels, right? But if it comes down to just the Chinese built ships, they can't avoid it, right? So again, the inefficiencies which we've been talking about are likely to be much higher. But I'll just add one point, particularly on the freight side of things, right? I think the freight is also dependent on the demand side. And earlier we were talking about the tariffs, right? So I think what we are seeing right now is it's essentially the downstream demand which starts getting impacted. So even if you have inefficiencies into the system, if you have congestion and so on, the freight might not go up to the level which we saw earlier, let's say back in the COVID or even with the Red Sea divergence, because the downstream demand is looking weak now.
You mentioned COVID just now, and I want to ask you about this. How does what's going on with the shipping industry in the trade war, how does that compare to what it experienced going through COVID-19 just a couple of years ago?
Certainly, I think COVID was, I shouldn't call it a one-off, but it was a very different situation, right? What we saw that time, there was a huge demand upsurge with all that stimulus which came about. You had all the consumers basically sitting at home and ordering stuff. You had shipping certainly moving in the global scheme of things, right? So that point of time, what it led to was significant congestion at ports, right? There was a lot of pullback in terms of the capacity from the market, and when the demand returned, you can service that market, right? So over a period of time, That led to higher freight rates, port congestion, and so on, all the way till 2020, late 2021, 22. After that, we did see normalization of shipping market, but then the Red Sea came about. Again, diversion of ships started happening through the Cape of Good Hope, and that tightened the capacity. So COVID was slightly different in terms of significant tighter capacity, but solid demand. I think this time, even if we have capacity which gets tightened because of blank sailings as well as pulling out of certain trades, we don't have that demand support. And I think if you look at what WTO recently did, they cut down their global trade estimates very significantly for this year, barely flattish to slightly higher growth in 2025 compared to a much higher number of 2% at the start of the year.